The future of gold. Will gold still matter in the modern world? Imagine a world where money exists mostly on screens. You pay with your phone. You save money in digital accounts. Banks move billions of dollars electronically every second. Cryptocurrencies promise a new kind of financial system. Artificial intelligence is transforming markets, and governments are exploring digital currencies. Yet, through all these changes, one ancient asset continues to survive: gold. For thousands of years, civilizations have fought over it, traded it, stored it, and used it as a symbol of wealth and power. Kings wanted it, empires accumulated it, banks stored it, investors bought it, and central banks still hold enormous reserves of it. But now, the world is changing again. If money becomes increasingly digital, what happens to gold? Will it remain one of humanity's most trusted stores of value? Will technology make gold less important? Or could gold become even more valuable in an uncertain future? This is the story of the future of gold.
Why gold survived? Gold is unusual. It does not rust easily. It does not decay. It can be melted and reshaped. It is relatively rare. And unlike many other commodities, gold can remain valuable for extremely long periods of time. Ancient civilizations recognized these qualities. Gold became associated with wealth, power, religion, and royalty. Over thousands of years, that reputation became deeply embedded in human civilization. Even after modern financial systems developed, gold did not disappear. Instead, its role changed. It moved from being primarily a form of money to becoming an important financial asset. And that transformation may explain why gold remains relevant today.
Gold and the modern financial system. For much of modern history, gold played a central role in monetary systems. Many currencies were connected directly or indirectly to gold. Governments and central banks maintained gold reserves. Paper money could represent a claim on physical gold under certain monetary systems. But the modern financial world eventually moved away from this arrangement. In 1971, the United States ended the dollar's convertibility into gold for foreign governments. The global monetary system entered a new era. Currencies became primarily fiat currencies. Gold was no longer the foundation of everyday money. But something interesting happened. Gold did not disappear. Instead, it became an asset that investors and governments could hold outside the normal currency system. Gold had found a new role. Gold as a store of value. One of gold's most important modern roles is as a store of value. Investors often turn toward gold during periods of uncertainty. Why? Because gold is not the liability of a company or government. A gold bar does not depend on a company's profits. It does not require a bank account to exist. And physical gold can be held outside the traditional financial system. This does not mean gold always rises in price. Its value can fall. It can underperform stocks, bonds, or other investments. But its unique characteristics make it attractive to people who want diversification and protection against certain financial risks. That role could remain important in the future.
Central banks and gold. Perhaps one of the most surprising parts of the modern gold story is the continued role of central banks. Central banks manage national monetary systems. They hold foreign exchange reserves. And many also hold gold. Why? Because gold can provide diversification. It can serve as a reserve asset. And it does not carry the same type of credit risk as a government bond or bank deposit. When governments and central banks face geopolitical uncertainty, sanctions, currency concerns, or changing international relationships, gold can become particularly interesting. This raises an important question. Could gold become more important as the global financial system becomes more fragmented? Perhaps, but the answer will depend on how the international monetary system evolves. Gold in a digital world. The modern economy is becoming increasingly digital. Money moves electronically. Investment platforms allow people to buy assets from smartphones. Digital banking is becoming normal. And cryptocurrencies have challenged traditional ideas about money and ownership. At first glance, gold may seem outdated. It is heavy. It must be stored securely. It cannot be transferred across the internet in physical form. But technology has created another possibility: digital ownership of gold. People can now gain exposure to gold through financial products without personally storing large amounts of physical metal. This creates a fascinating combination. An ancient asset can exist inside a modern digital financial system. Gold itself may be thousands of years old, but the way people own and trade it can continue to evolve.
Gold versus Bitcoin is the comparison between gold and Bitcoin. Both are sometimes described as alternatives to traditional money. Both have limited supply characteristics. Both can be held outside ordinary bank deposits. But they are fundamentally different. Gold has thousands of years of history. Bitcoin is a digital technology created in the 21st century. Gold is physical. Bitcoin is entirely digital. Gold requires mining and physical storage. Bitcoin depends on a decentralized computer network. Supporters of Bitcoin sometimes describe it as digital gold. Supporters of gold point to its long history and physical properties. The debate may continue for decades, and it is possible that both assets will occupy different roles in the future.
Gold and technology. Technology is also changing how gold itself is produced. Mining companies are using increasingly sophisticated geological surveys, satellite technology, automation, and data analysis to locate and extract deposits. Artificial intelligence may improve exploration. Automation may make some mining operations more efficient. But technology cannot eliminate one fundamental fact: gold is scarce. Extracting it requires energy, equipment, labor, and capital. And mining can have serious environmental consequences. As society becomes more concerned about sustainability, the gold industry will face pressure to reduce its environmental footprint. The future of gold will therefore depend not only on its price, it will also depend on how responsibly humanity can produce it.
The environmental challenge. Gold has always had a physical cost. Mining can disturb landscapes. It can consume water. It can generate waste. And poorly managed mining operations can damage ecosystems and communities. This creates a challenge for the future. If demand for gold remains strong, society must decide how that gold should be produced. Recycling could become increasingly important. Old jewelry, electronics, and industrial materials contain gold. Recovering this gold can reduce the need for some new mining. The future gold industry may therefore become increasingly connected to recycling, technology, and environmental standards. Gold may be ancient, but the industry surrounding it will have to adapt to a changing world.
What could make gold more valuable? Several forces could influence gold in the coming decades. Economic uncertainty could increase demand. Geopolitical conflicts could make investors seek traditional safe haven assets. Changes in central bank reserve strategies could affect demand. Inflation and interest rate expectations could influence investment decisions. And growing wealth in emerging economies could create additional demand for jewelry and investment gold. But there are also forces that could work against gold. Higher interest rates can make non-yielding gold less attractive. Technological alternatives could compete for investor attention. And changing consumer preferences could affect jewelry demand.
The future price of gold is therefore impossible to predict with certainty, but its strategic importance may be more durable than any individual price forecast.
The future of gold. So what will gold look like in the future? Perhaps it will remain largely the same. Physical bars stored in secure vaults, gold jewelry passed between generations, central banks maintaining reserves, investors using gold as part of diversified portfolios. But the surrounding system may become very different. Gold ownership may become increasingly digital. Mining may become more automated. Recycling may become more important. And gold may compete with entirely new forms of digital assets. The most interesting possibility is that gold may not need to defeat digital money to survive. It may simply coexist with it. The future financial system could contain digital currencies, cryptocurrencies, electronic payments, traditional investments, and physical commodities all operating together. And gold could remain the ancient asset inside a very modern financial world.
The future of gold. Gold has survived thousands of years of change. It survived the rise and fall of empires. It survived the invention of paper money. It survived the creation of modern banks. It survived the end of the gold standard. And now it faces another transformation. A world of digital currencies, cryptocurrency, artificial intelligence, electronic finance, and rapidly changing global economies. Perhaps the future of gold will not be about returning to the past. Perhaps it will be about adapting to the future. Gold may become increasingly digital. Its mining may become increasingly technological. Its production may become more environmentally responsible. And its role in global finance may continue to evolve. But one thing is remarkable. After thousands of years, humanity still looks at this rare metal and sees something valuable. Maybe that is the greatest story of all.
Gold survived because human civilization never completely stopped believing in it. And as long as that belief continues, gold may remain part of our financial future. This is the future of gold, an ancient treasure entering a digital age.